Go to Capitec, which is a full retail bank with advances in excess of 30 million rand. As at the year end, it was established in March 2001 by the team at PSG, that's important, and listed on the JSE in 2002. Market cap of 22.6 billion rand, price to earnings ratio of 11.8 and a dividend yield of 2.6%. Firstly, Paul, have we ever owned this one?
We have owned it in the portfolio, and we actually have made small gains in it from time to time, but we've been a little bit scared in recent months by the sector. So whenever we've owned it, we've been rather circumspect about how long we've kept it. But look, to go back to 2002, it's been a fantastic success. It's now positioned as one of the larger banks in South Africa by a number of customers. It's done very well. It's blended full transactional banking, branch-based banking, good technology, solid management, good management of credit risk, and as a result, it's gone. It's been a 100 bagger. It listed at 2 rand a share, and it now trades close to 200.
Close to 200 rand. Could you, at this point, go in and buy it, Chris?
Well, it's come from 230. It's now 195. So it has pulled back quite a bit in the last, few months. I think 2 months or so.
So the question, perhaps just rephrasing it, is it a buying opportunity?
One needs to look at the space and say, firstly, is there further growth in the space? This is a company that's really gone and taken the big four head on with a retail footprint that's very strong, it's very bright, and I think it's been attractive, and especially with lower cost banking, as the big four really have leaned on costs, etc., or bank charges to actually boost their profits. So Capitec came in huge competitive advantage, and I think they still hold that. Although the brick and mortar, do raise costs, they've got a very, I think, cost-efficient brick and mortar sort of model, in the sense that it's not as lavish certainly, and is attracting that end of the market that's just looking for just basic transactional banking, no frills, etc. And I think there is quite a big demand for that. It's also one of the unsecured lenders that have managed to gain profits over the last year rather than see their profits implode. So I think,
well, that's always a good thing, isn't it? I think the bigger question here, Paul, is whether we're going to see more pressure on the South African consumer, and I think I already know what your answer is going to be on this one.
Look, I think consumers are always under pressure. The funny thing about consumers is they'd always like to have more money. They'd always like to have bigger increases. And of course, if the economy is expanding and people are getting jobs in either the formal sector, the informal sector, or in the state, which has been a major employment provider in recent years. So one doesn't know as you stand here where quite it's going to go, but I'm naturally optimistic. So I think our economy is going to start accelerating again in line with other economies. And so these problems will sort of work their way out. Because obviously, to the extent that you go through a period in which the banks are very conservative, that is creating the next boom phase, isn't it? Because that creates people, larger spending power.
I would though suggest, though, even if the economy is static, this is an area that still can see growth, especially as the lower end, gain jobs, even if it's entry-level type of jobs, and gain access to more credit. So I think it certainly has got a bigger growth potential than the actual economy itself.
Okay, but to come back to Capitec, Bronwyn, I mean, my concern would be that the other banks, by which I mean Standard Bank, Absa, First Rand, and Nedbank, are definitely not asleep. They are also looking to extend their books. For them to push an additional 10 or 20 billion rand.
This consumer base is the most exciting. Is that what you're saying there, Paul?
Well, those people have the current account of the client in question. So it's much easier for them to ascertain just how good quality that business is. They can see the skipped debit orders. They can see people that are under financial pressure. They can see people whose salaries come in and who disappear 2 days later or 2 hours later. So those people are in a much stronger position to decide on the quality of the credit that they write.
Riaan Stassen has recently just left the fold. I mean, he's still involved, but he's no longer CEO. Chris, has that got any bearing on your investment decision?
I think the management has got, obviously Louis Stassen was an important move and shaker in the business, but I do think they do have some depth of of management, which I don't think one needs to worry about too much.
Paul, do you echo
Yeah, I think
Chris's
so, because
sentiments
I think
there?
Rian will come back as a sort of non-executive in time, in the same way that Michiel Leroux, the founder, came back after a sort of cooling off period as an executive there. So very deep bench. I don't have any concerns about that. I just think,
I like that, a deep bench. I think we'll use that terminology more often.
as far as Capitec's concerned, remember Capitec does have those direct deposit full retail banking solutions. So again, like I said about the others, Capitec is actually in a position to be quite cautious about who they extend credit to. And in addition, they've been quite cautious with regard to the way that they've extended larger loans to good customers. So I think their book's in reasonable shape. I don't think I'm too nervous about them.
Yeah, I certainly think that their book quality is in fact better. It's one of the reasons why they, I think, have still been able to grow their profits despite a, how could I say,
Despite a weaker consumer environment.
And I would say that their business has got to the point where the costs are there and it's actually very scalable.
So it sounds like an asset manager.
Yeah, very much so. So it's a case of you gain more customers, you gain greater share, and it actually is quite profitable, you know, as opposed to others that might be struggling a little
Paul,
bit.
hot or not?
Well, this is where it gets difficult. I think the earnings are going to be fine, if somewhat muted. But I've got a concern here, and that is that the whole sector has been painted with a very negative brush currently. The sentiment is poor, so I don't anticipate big share price gains here. And this is, after all, what our hot stock show is all about. So I'm afraid I'm going to have to go not hot on this one.
And Chris?
I would go hot simply because I think it's pulled back to the bottom of a range. I do think over the next few days there might be a bit more of a pullback, but I think that's more an opportunity for a trading part. But I do think if you're taking a longer term view, that the actual upside is more muted than.
So you are saying hot on Capitec?
On a short term.